In this presentation, we will continue on with our comprehensive problem related to a not-for-profit organization, a non-profit organization, a private college organization. Last time, we have entered transactions related to a time period. We had then done the adjusting entries. This time, we're going to look at the financial statement related to, or the financial statement of, the statement of activities, the statement similar to an income statement. Now, as we do this, recall that we have two trial balance that we have been putting together, or that we have put together, one being the adjusted trial balance, one being the post-closing trial balance. This first trial balance had the beginning balances here. We then entered the adjustments to get to the ending trial balance. Here's the ending trial balance. This is the one we are going to be working with for the most part. Then the second trial balance down here, we had the closing entries that closed out the temporary accounts and closed them out to what would be similar to the equity section here, of course, that being to the net assets section. So we might be looking down here just when we're considering the net assets section, but we're going to be working most of our time up here with this trial balance, basically the adjusted trial balance with these ending numbers and these accounts. Now, we are going to be looking at the income statement type account, which is going to be the statement of activities. That means we're considering these accounts that are going to be below what would be the equity section, what would be similar to the income statement type accounts, revenue and expenses for a for-profit type of organization, similar here in the not-for-profit organization. So we're looking at all these dark blue accounts to create our statement of activities. As we do so, you'll recognize within the dark blue accounts, within the temporary accounts, within the statement of activities accounts, that we have the breakout in these accounts of without donor restrictions and with donor restrictions as we go, labeled by the accounts or within the accounts. Within the statement of activities, we will be breaking that out between without and with donor restrictions by column. So we're going to have to, so it'll make hopefully more sense. This actually looks a lot easier to read once we break out the columns here for a reader of the financial statements typically than having the accounts within the trial balance. Okay, so we're going to start off as we typically would for a income statement. We're going to start off with revenues. We're going to call revenues and gains. We're going to start off with tuition and fees. We're going to say that tuition and fees are going to be net. And that means that we're going to be picking up these accounts, the tuition and fees, and there's only one of them, so we don't have a restricted one. But we're not going to be putting the whole, thing, the whole account name, the whole thing that says without donor restrictions, because we're going to say it's called tuition and fees, and then we'll put it into this column, which means it's without donor restrictions. It's a negative over here. We want to have a positive over here. We don't want to have credits in our statement of activity, so we're going to say negative of that number and enter. Once we find a home for all of these, we should be good. Now note that this number as well is actually included in the tuition. So let's go ahead and actually say that we want, I'm going to delete that, the negative sum of these two numbers. So it's going to take this account and the contra revenue account, because the tuition and fees discount and allowances is in essence a contra revenue account. There we have it. And so these two, we found a home for them. I'm going to make them yellow, indicating that we have found a home, and that can give us a sense of satisfaction that those two have a home now because of us. And then the next one is going to be the contributions. So we have all of these contributions. One's going to be restricted, and the others are going to be, one's going to be without restrictions. The other four are going to be restricted for one reason or another, which we are going to group into just simply restricted on the statement of activities. So what we're going to put on the statement of activities is simply contributions, and then the column will dictate as to whether the contributions will be without restrictions or with restrictions. So we're going to be in the contributions. We're going to be in cell U14. Within U14, I'm going to say negative of this number, the 1,908,000, and enter. Then the other four accounts, or three accounts, four accounts, we're going to say that those are all going to be in the restriction. So we're going to sum those up. We're going to be in cell V14, negative SUM, and then we'll pick up all the other accounts. That's going to be here, 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 here. That's right, and enter. So there we have that, and then we'll sum that up in the outer column like so. So there we have it. Now we found a home for those accounts. So we're going to say that these accounts have a home. So that's going to be down to here. And there, those accounts, right click and make them yellow. Home has been found for them. Then we have the auxiliary enterprises. And so that's going to be the next item. That's going to be without restrictions. So we're simply going to put them in the with restrictions column, negative of that number, and enter. Going to make that yellow. So we'll right click and make that yellow like so. And so we have found a home there. Next, we're going to pick up, we're looking for the revenue type of accounts. We're looking for those credit balance type of accounts. We're not going to pick up these two, not yet. We'll do that next time, but we're going to pick up the unearned gain on investment. Notice it has a without restriction component and a with restriction component. We're simply going to call it in our statement of activities, unearned gain on investment, and then put them to restriction or without restriction given the column. These again are going to be credit balances. We need to flip the sign to make it a positive number in our statement of activity. So we are going to say negative of, scrolling down and picking up the unearned gain without restriction. And then in the second column, the one with restriction, we are in V16. We're going to say negative of, and scrolling back down, we're going to pick up the second one with the restriction with regards to the endowment. So there we have that, and then we'll sum them up in the outer column. So now we're in column W equals the sum of these two, and we'll sum this one up here as well of those two. So there we have that, and then we have the last component, which we are going to deal with, that kind of transfer type of accounts from restricted to unrestricted, or without donor restrictions, with donor restrictions to without donor restrictions. So we expect then the without donor restrictions to be increasing, the with donor restrictions to be decreasing. We're going to be picking these up from these two kind of funny accounts. These are the new accounts, kind of like the new thing with the not-for-profit organization. I'm going to make these yellow down here, by the way. That's what I'm doing, in case you were wondering. And so we found a home for those. That's why they're yellow. So now we're going to make these, we're going to record these two. Now, the first one has without restrictions, the second with restrictions. A little confusing to get to know which way we're going on these things with regards to debits and credits versus plus and minus on the statement of activities. You'll see here that the one without restrictions has a credit balance. That's the one that should be going up, and it's going up in the credit direction because I would consider these kind of like a revenue type of account. So this one is increasing here, but on our statement of activities, we need to show that increase not with a credit, as is shown here, which is a negative number for Excel, but a credit for debits and credits. In our worksheet, it needs to be a positive number to show an increase in a plus and minus format. Therefore, in cell U17, I'm going to say negative of, and then pick up that 530,000. The second one, it has a debit balance. It's got a debit balance because, again, you can think of it kind of like a revenue account that should be decreasing because it's coming out of that account. And so what we need to do then is decrease it with a debit. But when we go to our financial statement, we actually want to show, this is one of those cases where we actually show a negative number instead of saying it with words that it's a subtraction problem. Therefore, we're going to flip the sign there, say negative of that positive number to have our items here. So in essence, you would expect in this statement that this account, this side without restrictions should be increasing, this one should be decreasing. But when you take the accounts from the trial balance and you think about the debits and credits, it can be a little bit confusing. So you want to mold that over to get that idea, that concept down. All right, so there's going to be those two. They sum up to zero. It's kind of like an intercompany type of transaction, or kind of like an interfund type of transaction, if you want to think about it in that format. So they net out in total. And then we are going to have the total revenues and gains. That's going to be in cell U18. Within U18, we're going to say equals the sum of trustee sum formula, those column up. And then we'll copy that across. So we're going to put our cell here, our cursor there. We'll use the autofill to copy across like so. And there we have that. Next, we're going to be looking at the expenses. So we're going to have the expense category, and then we're going to further have a subcategory that will be called educational and general expenses. And down here, we could say we found a home for these, by the way. And so we want to make sure that we give ourselves credit for that and that that's done and we feel good about that. All right, so then we're going to go through these. These are going to be the expenses. We have the instruction expense, the academic support expense, the student service expense, and the institutional support expenses. Now, these are all going to be unrestricted or without restrictions. So I'm going to just copy these down right below here in the expense category. So I can just pick that first one up. We can use the autofill if we so choose, and I'm going to choose to do so by just autofilling down because they're all right in a row. So we'll autofill down, and that takes it down to the institutional support. So that looks good. And then we're just going to pick up the numbers. We're going to put them in the first column. That's the column without donor restrictions because they have no donor restrictions. So we're going to say this is equal to, and we'll pick up that 4,446,290. Then we could autofill that down as well if we so choose. And yes, I'm going to choose to do so. So we're going to autofill that down. And that should pick up the numbers. Checking that number, it looks like it's picking up the right number. It looks like it's going to work, so we're good there. Nothing's going to be in the without or with donor restrictions column. Therefore, in the total column, we're going to just sum up, and we'll pick up the same. We'll get the same number there, of course, and we'll autofill that down. There we have the expenses. We'll total those up. Let's total that subcategory up. Let's go ahead and underline these cells because the underline went away. So that's going to be in the Home tab font group underline because I autofilled them and that messed up the underline that I had there before. And then we'll use the trusty sum function in cell U25. So within U25 equals the trusty sum. Shift 9, let go, up arrow 1 time, holding down the shift, up arrow 3 times, and enter. You could close it up if you want. You don't have to. And then it does this one for us. We could do the same sum function in the middle, even though there's nothing there, just to represent the 0. So we want to see the 0 there. And then underneath that, we're going to have the auxiliary enterprise expenses. These are going to be the types of things that are kind of like what you would think of as not normal type of operating activities in an income statement. So we put them down below. These are not part of the normal kind of organizational type of activities. Therefore, we put them in this kind of subcategory saying, hey, this is the auxiliary enterprise activities, kind of like the more business type of stuff down here. And we're going to pick up that one. That's going to be the 145,510. All right, and so then we found a home for all of those. So I'm going to make those yellow, and that's good. That is nice. And then we'll sum this up on the right side equals the sum of these two. There's only one number there, so obviously we will pick up that number. And then we're going to have the total expenses and losses, which is going to be the sum of just these two. We had the subcategory and this other item equals the trusty sum of those two numbers. And then we will copy that across. So we're going to autofill that across. So we have that. And then we're going to have the change in net assets. Change in net assets. As we do this, we could underline here. Change in net assets is going to be equal to the net revenue and gains minus the total expenses and losses, and enter. So that's going to be the 813,740. We'll put our cursor there and autofill across there. So same activity across on that. Now that's going to be the bottom line. That's kind of like the net income type of number. That's kind of like the bottom line of the statement of activities in terms of what would be similar to revenue minus expenses, bottom line being net income in the for-profit type of organization. It's called net change or total change in net assets, which would be kind of like calling net income in a for-profit organization like the change in retained earnings or the change in the capital account for a sole proprietorship. The reason you can't typically often do that in a sole proprietorship or for-profit like in retained earnings is because there might be something else in there, such as dividends or investments. But if there's not anything else in there, the change in the equity section, the change in retained earnings from time period to time period, just like we saw in down here, the closing entry process would be equivalent to the net income, closing out the net income to the capital accounts. So here we don't have draws or investments that are typically going to be recorded to net assets. and therefore the change in the net assets will be due to simply the activity that happened. The temporary accounts, the kind of like net income number from the statement of activities. So we can just call it then the change in the net assets. So that you want to think about that as kind of like the net income number, bottom line number, but we're not done yet. We're then going to go to the beginning balances. And we're going to go to what would be considered similar to the equity section. And that's going to be the net assets section. So we're going to tie out to the ending net assets. So we're going to start with the net assets beginning of the year. This is going to be similar to a for-profit type of organization. This number here is going to be the net assets at the beginning of the year because nothing got closed out to it, right? So, nothing got posted to it. Things did get closed out to it when we did the closing entries, but they're not closed out yet. And this trial balance and the adjusted trial balance, and we had no activity in those accounts during the time period because these are kind of like similar to retained earnings type of accounts, and we don't typically record to them unless there's some kind of weird thing that happened or like an investment, but not for profit, typically nothing recorded. Therefore, that's the beginning balance. So we'll pick up the beginning balance, and that's going to be, I'm going to say negative to flip the sign, and we want to pick up the beginning balance for the without donor restrictions in the first column. And then the negative in V29, we want the beginning balance with donor restrictions in the second column. And then we could sum those up. And then if we add that to the change in the net assets, we will then get to the net assets at the end of the year. So we're going to then sum these up equals the sum of these two. And then we can copy that across. We can autofill that across. And that's going to give us our 17,439,380. Now, these numbers then should tie out to our post-closing trial balance. So this is where we'll take a look at the post-closing trial balance. We've got these three numbers, which I'm going to just pull from the post-closing trial balance just to see if they match up, right? That's going to be this number and this number. And then, of course, if we sum those up, there we have these numbers, right? So that's going to be equivalent to, after we closed out all the temporary accounts, we closed it out to the net assets accounts. And there's basically our net assets, which tie out to the ending numbers that we have on the statement of activities. As we tie the statement of activities, the change in the net assets to the ending net asset numbers.